So does everyone see the presentation? Yep. Tufik, do you see it?
I see it.
Oh, we have something coming in on the chat. Someone saying yes. Thank you. Thank you. When we say something, it's always awesome when folks say something back so we know like we're talking to someone. It's always a great feeling. Excellent. So we'll be able to start real soon. Let me just, okay, great. All my buttons are working. Okay, 1 more minute and then Tufik will lead us out. Oh, more stuff coming in. Let's see what folks are saying to us. Oh, they're saying great. And more people are saying they see it. This is excellent. Okay, I'm really, really happy when the technology works. And when it does, I'm also happy to hear from you that it's going well for you as well. Oh, it looks like we've reached the top of the hour. So Tufik, you want to lead us out?
Sure, yeah. Well, first of all, thanks everyone for joining us. This is really exciting to get to do our first joint webinar with KISS Patent, where we get to talk about, what we're doing and what we've been doing for a couple of clients, not only together, but just in our businesses. And yeah, we'll be excited to talk about a couple of our passions here, which is, essentially how to get your startup off the ground, how to make it pretty, how to make sure that you got your T's crossed and your I's dotted, and how to get yourselves in front of potential investors, especially during these uncertain times where I think a lot of startups are thinking, hey, should we even try to search for investment? Should we just shelve our ideas? Like, is this even worth it? And newsflash, we have Devor and myself have several clients that have successfully raised and are raising during this period of time. So we'll share a couple of best practices and tips that they've been doing to kind of get their goals achieved even during a post-COVID environment. All right, so being that I'm a lawyer, I have to always make sure that everything is so nicely disclaimed, as you may have become accustomed to. So, quick disclaimer is that obviously this presentation is for informational purposes only and educational purposes only. Nothing in this presentation can or should be taken as actual legal or patent advice. And any discussion that happens between us with respect to this stuff does not create any attorney-client privilege or any of those other confidentiality rights that you are accustomed to when you do reach out to an attorney. And if you do want to do any of this work, we really do advise you to seek legal help. Did I cover them all? Is there any other riders we need to put in there? No? Okay.
No, that sounds great, Tufik. Of course, they can always come to us, but they should go to someone and get this advice.
For sure. All right, so who are we? So I'll start off. So my name is Tufik Looney, and I founded a law firm named Renno Co 2 years ago to deal specifically with founders and startups to help them raise money, set up their corporate structures, protect their IP, and find exits at the end. I found that a lot of the law firms in the current environment were not really tailored to the startup's needs, with kind of lobbies and art galleries, decorating their hallways that are more expensive than your house. I found a lot of our founders getting quite awkward walking in these prestigious looking law firms and not really knowing if they belong there or not. We try to be approachable, down to earth, and most importantly, because we've, and myself, this is my third company, we've been through the startup process ourselves. We can be empathetic and understand kind of on a hands-on and first-person level the needs of our clients, and we think that helps in the long run. And now to introduce Devora. Devora, you want to take it away? Yeah.
Yep, thanks. I'm Devora Grazer. I'm the founder and CEO of KISS Patent. I'm a U.S. patent agent, which means I only do patents. So I'm like a regular patent attorney, but not focused on regular legal practice, not like Tufik. I just do patents, and our firm only does patents and trademarks. Now, I have over 25 years of experience helping startups to capitalize on their potential through idea protection. Idea protection is what enables you to protect your idea, to protect your market niche, and to keep the big companies from coming and stealing your ideas. Like Tufik, we focus on startups, folks who are getting their companies off the ground, folks who want to bring world-changing ideas to make the world a better place. Like Tufik, we focus on making that experience transparent, affordable, and easy for you. Okay, Tufik.
Cool. Yeah. So we'll get into your goals right now and talk a little bit about that. But before I get into it, I really want to say that we really do welcome kind of questions whenever you guys feel like having a questions. You know, I got the chat open. So if you guys want to ask a question, do so right away. Don't feel shy. We'll be happy to kind of answer the questions as we go along. We'll also have times where we'll be designated question times, but if you guys feel like you need to ask right away, you definitely have that ability. So I like to compare startups to babies. They're like babies or children for that matter. When they're born, they need a lot of attention. They cry a lot. They can't really do much on their own. And basically, if you leave them alone, it's well, you basically can't leave them alone, right? And as they grow, as they grow older and more mature, you know, you might enter into different stages of the startup, or you know, let's say in the ownery teenage years, the startup starts doing things that you don't really want it to do. It starts maybe rebelling against you. But besides the point, I think that for each stage of a startup's life cycle, there's going to be different opportunities and different challenges. And that's kind of the beauty of it, actually. And that's why a lot of you folks can succeed in different times of the company, and also then change yourselves and your operation to be able to meet the oncoming challenges of a new phase of the startup's life. You really at the beginning is just an idea, and you got to kind of get that corporate shareholder structure in place. And maybe down the line is that you've already done multiple rounds and you're looking to, you know, exit and kind of enjoy the fruits of your labor. So there's a huge breadth of kind of challenges and opportunities that a startup has to go through. And we would like to just conduct a quick poll here, just so we could kind of tailor our questions in our presentation a little more to the crowd. Is like, what stage are you guys? Are you guys very much at the idea stage, or you haven't really incorporated and you're just trying to get your stuff off the ground? Or you at the scale stage where, you know, you're incorporated, you know, you got a business partner, and you know, you got your MVP already in the mix, maybe already out, maybe you're still iterating on it. Or have you guys already closed the round and are looking to close another round, either a pre-seed or a seed round? Or have you guys really started to use your money and develop kind of a robust kind of IP portfolio? Yeah, we would really like to hear where you're at, so we can kind of best serve you during this presentation. So I'll give you guys a second to kind of go about doing that. In the meantime, I will talk about some certain little tidbits to come. Ooh, I just saw a question here. So super. So, you know, if you're not even at launch, there is the, I guess, if you go to the webinar on the bottom there, you get the options of, you know, a variety of different options. There's going to be a Q&A option there. If you click on the Q&A option, you can vote. So if you're not even at launch, just put it at launch, I would say. So pre-launch, just include it at launch, so that at least we know that you're still really at the early stages there. And thanks for your, yeah.
Sorry to interrupt, Tufik, but that is a really good point. Even if you are pre-launch to launch is a stage where you will have many of the same issues. It's quite a young startup. You do need to make certain that you have all of your legal aspects ready, your solid foundation, as Tufik will talk about later. And that is true at both pre-launch and at launch. That legal foundation is what will serve you throughout the life of your startup.
Cool. All right, so we'll give it a couple of minutes there, and we'll see what the answers are, and then we'll get going.
Absolutely. Okay, we're just waiting now for everyone to kind of tally them up. We're still seeing some interesting things coming in through the chat. Guess I should just leave that open. Okay, just waiting for those results to come in. All
Oh, the
right.
suspense.
Oh, here we do. We have the results. Yeah, drum roll, please. 89% are at launch and 11% are at scale. So this is awesome.
Nice.
We have all the folks who are going to change the world, and we know them now.
Cool. Cool.
This is
Very
great.
exciting stuff, guys. Awesome. So we can really make sure this is going to be a super pertinent kind of webinar for you guys. Yeah, that's really excited to see you guys at the launch stage. Definitely an exciting time. I remember it fondly.
Oh, excellent. Well, I'm really glad to see that. Maybe now we'll continue on.
Sure.
Okay, let me just, there we go. Okay, so what Tawfiq was talking about is a really super important point, that startups are like children, you know, they're babies, they're at pre-launch, they're very small babies, and then they get to launch and they continue to grow. But all successful startups have the same primary needs. First of all, stability and security, but also growth and potential. Now, the two do not have to be in conflict. You can bring both stability and security to your startup and also realize its potential and growth and its dynamism. On the stability side, you need to build a strong foundation for your business. The legal aspects are a very important part of that strong foundation. This is because it is a business, it is a legal entity, it needs to go out and engage with other legal entities and also with customers. These are business transactions, but they're also legal transactions. You also need to bring credibility to your investors. Your investors want to know that you have a solid, stable foundation, that while your startup may be a baby, it's a strong baby with a good foundation that can continue to grow. Now, on the growth side, of course, startups are all about potential. The idea is the core of your business. Innovation is what everyone is looking for. It's key. Investors are looking for your growth potential. They're looking for that innovative idea, but they're also looking for ways to justify their investment in your idea. At the very early stage, when you're at pre-launch or launch, your startup is all about potential, but you have to give them a reason to invest in you. One reason that they'll invest in you is because you set that solid legal foundation that Tawfiq will talk about later on. But another reason to invest in you is a patent. It's an asset that helps to justify their investment. I'll discuss that in a moment. So innovation is key for investors. Now, we all know this, but what exactly about innovation is so attractive for investors? Well, first of all, they want to know that you have a unique idea. It's not a copy of another idea. They want to know when they invest in you, it's because you have an idea that stands head and shoulders above the rest, that has that wow factor, differentiate it from everything that's already out there. After all, if they wanted to invest in an idea that was already there, they could go to some big company, some stock company with stock that's listed on the Fortune 500 or something. Instead, they want to have a unique idea with potential. They also want, with your innovation, for you to be able to prove the value of your idea. You need to show that your idea is unique, that it can capture a market niche that no one else can access because no one else has your idea. This helps to prove to investors that not only is your idea great, but you can also make a great business out of it. Remember, investors are looking at a business. They love cool ideas, but the cool ideas have to be translated into a strong business. You also need to be able to show that your idea is different. Now, doing a patentability search and review like what we do is one way to do that. But you also have to think about how your idea is different from a business perspective. When an investor invests in your business, they're investing in your innovation translated to a powerful business reach and a powerful market niche that you can dominate. Now, we always say that the patents are the bedrock of innovation. Why is that? Well, first of all, they represent a solid foundation. You have taken the time to understand how your idea is new and innovative. You have taken the time to do not only market research, but also patent research to understand how your technology, how your business, how your ideas, how all of that is different from what your competitors have already done. This shows investors you're willing to lay that solid foundation. You're willing to take the time. It also increases the valuation of your startup. Simply filing for a patent application increases the valuation of your startup by $1 million. Why is this? Well, partly because of number one, right? You've laid that solid foundation, but also because filing for a patent means you can control your market niche. That when you get bigger and better, someone can't come along and try to steal it out from under you. And also, of course, it attracts investors. And again, this is because of 1 and 2. Investors have a lot of choices. Coming out of the current situation, even within the current situation, they want to make investments. It's something that they want to do both on a personal reason and also for financial reasons. You want to attract investors, and having a patent, having that valuable asset is one of the ways to do it. So one question is, do you have innovation potential? Is the core of your business unique enough to get a patent? If your business is really a me too, if it's something that doesn't bring a new technology to solve a new business problem, it's not really unique enough to get a patent, but it's also not necessarily going to be that exciting to investors. You also want to know, are you the first to file for a patent? Patents are first to file. Whoever files first gets the patent. And this is a really key and critical point. Snapchat, now Snap, got into an argument with Mojo Media over who was first to file. They both waited to file their patent application. If instead they'd filed the provisional quickly, whoever had done that would have been the first one and they would have won. Instead, they were separated in their filings by only 19 days. You don't want to be that close to your competitors. You want to be putting your competitors in your rear view headlights while you speed on ahead of them. But also, not every idea can get a patent. Your idea has to be novel and inventive. Novel means new. Inventive means having that wow factor, that factor that sets you head and shoulders above the rest. It also has to be technical. Now, what do I mean by technical? Software, hardware, new drugs, new ways of sterilizing surfaces, which are really big right now, new processes for manufacturing food, packaging food, or preserving it, new ways of doing agriculture. If you're bringing technology to your business, if technology is your secret sauce, then your idea falls into a patentable category. Of course, it still has to have the wow factor. So one question I'm always asking my clients, we have to know enough to know, is your idea eligible to get a patent? Maybe you need a trademark or copyright instead. If you have that innovation potential and you are eligible to get a patent and you do have that wow factor, then you need to be first to file. And if you do that, then you can control your market niche and protect yourself from the copycats. So what is patentable? What can get a patent? What falls into that category? Well, product, technology, chemicals, we went through this a bit, software, hardware, new, non-obvious, and useful. So having that wow factor, but also having a use. Now, this is where your business comes in. If your technology is supporting your business, then clearly it has a commercial utility. It has a commercial use. You are making the world a better place through your business. That is also a factor into being patentable. So should you file during a crisis? We do get asked this question a lot, like, should we wait? Well, first of all, a patent lowers the risk for your company, and investors like companies with lower risk. Now, why is that? For a few reasons. Number one, the patent is an asset. The patent shows that you have figured out what your innovation is and you set that foundation. Number two, as an asset, you can actually get a loan against the value of your patent. Silicon Valley Bank and now competitors have sprung up. They're willing to loan you money against the value of your patent portfolio. So as long as you filed for a patent, you're eligible. A patent also lowers the risk because it means that you won't develop this great market niche and have someone come in and steal it like a bigger company. So again, you're de-risking yourself for investors. Right now, investors are looking for lower risk. Investors, of course, are also looking for hypergrowth. They want the great ideas, but also ones that can scale quickly and have great innovation. A patent allows you to focus on your innovation. Because you've protected yourself, you don't have to worry about someone sneaking up behind you and trying to steal your idea. And of course, the sooner you file, the sooner you can get an investment, which can kickstart your growth. And I see something coming in on the chat. Coming in. Okay, looks great. Yep. Do have a question here. So what happens if you wait? Well, so one of the problems is if you wait, is that first of all, someone else can file before you. You could be developing your idea for 1, 2, or even 3 years. But if someone files for a patent before you, even if they only worked on it for a day, they will still beat you. You don't have to actually have a proof of concept, an MVP, any kind of product ready to file for your patent. You just have to have a design. So many folks come up with a great idea. They spend some time whiteboarding it out. They're ready to file a patent. They could file before you and they could stop you. So if you wait, you could find that someone else has already filed and they could block you even if you worked for years on your idea. And of course, the sooner you file, the sooner you can show your strength to investors, which is really important. You want to be first out the gate to get that investment. And having a patent filed, having done all that groundwork on your innovation and understanding and really analyzing it, that'll pay off when it comes time for you to do your investment. And of course, as we say, timing is valuable. First to file wins. You want to get in front of investors ASAP. Now, you don't want to miss $1 billion buyout like Hipstamatic. I don't know how many people here actually remember Hipstamatic. It was a while ago. I remember. I think I'm dating myself. But what happened to Hipstamatic? They missed $1 billion buyout. Why was that? Well, we have this nice graphic here. In 2009, Hipstamatic launched and they released the first automated photo filter app. So all those photo filters that you have on Instagram, Hipstamatic was first to think of them, and they launched them in the app. Now, they didn't have social sharing, but they had all the technology that made your photos look like super cool. In 2010, Hipstamatic won the first ever App of the Year award. They could have filed for a patent in 2010 for the idea of the photo filter, and they didn't. That was their last chance. Why is that? Because in most countries, you can't file for a patent once you publish your idea, but the US gives you 1 year grace period. Hipstamatic missed the grace period in the US, and of course, they missed everywhere else in the world once they'd launched without filing. What happened? In 2010, Instagram launched. They also had filters that were just like Hipstamatic filters, and they also added photo sharing. In 2012, Instagram was bought for $1 billion. It was the world's first $1 billion startup buyout, and of course, they were bought by Facebook. 2014, Hipstamatic filed a patent for their new video editing tool, but it was too late to protect the real core of their innovation, what had guaranteed their business. By 2017, Hipstamatic had only 6 employees and was down to 117 in the App Store in the photo section, not even overall. And today, there are only 4 employees listed on the Hipstamatic website. So they went from high-flying startup to has-been, and they missed the $1 billion buyout because they didn't file for patents that could have protected their idea, and they let Instagram steal their idea right out from under them, and there's nothing they could do about it. So you do need, oh, we have a question coming in. Do you need to patent an app? Okay, so we believe that you do need to patent apps such as software. You saw the example with Hipstamatic. They could have patented the functionality, and they could have said it can be on an app, it could be on a website, it could be on any computer or computational device, and these days our smartphones are considered to be computational devices. So patenting an app, you can patent it, but you're not limited it to only having it be for an app. Now, revealing the algorithm underneath it, that's a tricky question. One way to look at it is you need to reveal enough so someone can make, use, and sell your invention, because that's what your patent protection will be given for. So you have to say something. The more you reveal, the more you can protect yourself. But also, one important point to remember is patents take 18 months to file from the first date of filing. 18 months later, you may not mind your technology publishing. And in the US, you can file for a patent so that it stays secret until it becomes a patent. So even if you end up revealing the algorithm, no one will know until the patent comes out as a patent. So I hope that answered your question. Please feel free to ask more. All right, the question thing is now not behaving. And will slides be made available? To be honest, I think the slides are helpful, but we're going to have a recording. So that would definitely be made available. As for slides, watch this space. So we think you should act now. You should act now to protect your ideas and not let yourself become like Hipstamatic, missing that $1 billion buyout. We have a simple 3-step process to get investor ready. First of all, we consult on your idea. We help you learn your options. And we do it through a free discovery call on your idea with one of our patent experts. No obligation. Just talk to us. We like talking to people. You can see we're always really happy to see you and we want to hear about your cool ideas. We want to help. So talk to us and let's see what we can do to help you out. We then evaluate your idea. We do a patent search for you. You'll learn if your idea is patentable and if you're first to file. But what's really important about this evaluation is we value your idea. We'll prepare an analysis that shows the value of your idea and uniqueness in comparison to everything else. So patentability is about uniqueness. Patentability is about value. Our 3-step process will enable you to capture that value and to show it to your investors. And I have a question. Okay. All right. Next question. Great. So one quick question about this. What does the valuation involve? So what we're looking at is how much of a market niche could your patent capture with your idea? So what we're looking at is the market valuation, which we would ask for your help with. We would then value the idea based on how much of that niche you could capture. And we use that to help determine the value and its uniqueness in comparison to other things. And questions. Okay. Case of a provisional. Okay, so the inability to complete it within a year, we have multiple strategies. If you file a provisional, then we help you decide what's best to do within the year. One strategy is you can refile. Another strategy is to file in the US with a non-publication request so it doesn't act as prior art against you, so you can keep on filing. You could also choose to file internationally with follow-ups. The point is there's no one size fits all. It depends on where you are in your life cycle and what would bring you the most benefit. We're always happy to talk with you about these ideas. There's also a question about having a program idea. Okay, folks, I can't get into super duper specific things. If you do have a question like that, then sign up. We will be having the ability to have like a discovery call. You can sign up on our website, talk to us. We're always happy to do it. But we also have a special offer for you. Our mini course and free patent search, you can get investor ready for $5.99. So it's the best package to show investors the value of your idea, find out how unique your idea is, plan your patent, and show the size of your patentable market niche. This is being offered for a limited time for $5.99 to get you investor ready. So you can always come to us. We're going to have that link. We'll be putting that into the chat. At least I hope my behind the scenes group is putting into the chat right now. And then you'll be able to click on the link and immediately go forward and start with this. And yes, we're always happy to talk with you. If you have questions, we can't go into details now about your idea, but we'd be happy to ask about them afterward. And I see in the chat, yep, there it is. Click on that link and you can go forward and talk to us about your idea and also get the package. Now, without further ado, I am going to turn this back over to Tufik, who is going to be talking about ideas with solid foundations and how can you show an investor that your idea really has that? What comes next, Tufik? Here, I'm going to stop sharing my screen. You ready to go?
Yeah, I'm back on. Yeah.
Okay, I'm going to stop sharing my screen so you can share yours.
Sure.
Excellent.
There we go. Does everyone see my screen? You see it?
Yep. Okay, excellent. Tufik, thank you.
All right. So we're going to be talking on the legal side of the investor readiness process. First of all, I want to thank Dvora for her really informative presentation there on the patent side of the process. So yeah, essentially, the way I look at the legal and the corporate side of it is very similar to kind of selling your home or property, and I'll let you guys know how that is uh, in a second. So, in your life cycle, essentially, you got an idea, and there's going to be a lot of work to be done in the middle, and then you're going to receive an amount of investment in the end. Uh, I call this a bit the Drake paradox because, as you know, Drake famously said, "Started from the bottom, now we're here." But how did he get there? Right? It's there's he doesn't really explain us how you got there, and that's really where the secret sauce was made. Um, but indeed, here we're going to have to talk about how you can get there, because that's really where one's ideas are made or broken. Like I was saying before, your startup is kind of like property, right? You're going to be putting value into that property, and you're going to be putting value into that property via your hard work. But how do you denote property? How do you kind of, if we're going with this metaphor, how do you kind of solidify that vessel to hold that value? Um, you do that through a corporation, and you do that through contracts. Contracts have value. They are worth money, and contracts are necessary to be set up in place to protect that value, right? Think about it. When you have a property, you need to build a house. The house is going to have value vis-a-vis the land, and you're going to have to make that house look good. And you have to add a kitchen, a bathroom, bedrooms, and whatnot. Those are the contracts which essentially are going to be able to put that house into place and allow you to build out an idea with value. Uh, the contracts protect that value, they protect your efforts, and they also allow investors to invest in in your ideas. And we'll talk about a couple of anecdotes where we had a couple of close calls uh, vis-a-vis kind of startups wanting to get an investment in the door and really not being prepared. We'll let you know about that in a second. But essentially, there's going to be a lot of legal work, IP work, and just organizational effort and business work done at this stage of the game to be able to seek investment properly when the time comes. And all of that has to be encapsulated through agreements, which then kind of solidify the value of your work. So why do this during a financial crisis? We are assuming, we're playing on the assumption that we're going to be entering into a recession uh, because of the implications of COVID. Um, let's just run with that assumption now because it's kind of worst case scenario, so we can kind of build out our ideas from there. Um, well, there's been a lot of great companies that have come out from recessions, right? In recessions, obviously things slow down. People have a little bit more time on their hands, and people can think a little creatively about um, certain ways to do business. Uh, and that could be you guys. This could be your time to really concentrate on those types of opportunities and be able to work hard on your projects to make the most out of the situation. Uh, a couple of our clients have found success in fundraising during this time because they've been able to leverage the current situation to their advantage. I'll give you one example. We have a client that is essentially an Amazon for auto parts, right? They are, they're going through with seeking with investment. But what's happened is actually investment has accelerated and not decreased during this time. Reason being is because they've successfully been able to convince investors that their business negatively correlates with the market, right? They've successfully also convinced investors that they're going to need to diversify the current portfolio of companies they have in order to mitigate risk uh, in their investment portfolios. They have been able to show a case in point where they've said, hey, we have a company that negatively correlates, being able to show data that it does so, not only from previous financial crises like 2008, but was able to show currently the short-term kind of trend changes that have been happening in their company, and saying that, look, if you have an investment portfolio filled with these kind of assets that are going to positively correlate with the market, then you need something to go the opposite way. And it's really gained traction. This not might be the exact same case for you, but there's going to be other pitches that you could actually do that might benefit your kind of narrative vis-a-vis investors. We have a startup that's closing a secondary transaction in the hospitality industry, and you might think that the hospitality industry is dead, right? No one's traveling, no one's using hotel or short-term rentals. Why would anyone in the right mind invest in a startup that does that? Well, they said that, hey, look, right now is the time to reinvest in this kind of industry, because this industry is not going to go away, right? It's just taking a bit of a hiatus, but now this type of hiatus will actually allow everyone to develop R&D, refurbish, change things up, invest in their properties to extract maximum value down the line. They were able to convince the investors of that fact, and was able to seal a secondary transaction investment on that ground. So again, each of your situations will be different, but don't think that this opportunity will go to waste. Like Winston Churchill said, never let a good crisis, never let the good opportunity, wait, what did he say again? Hold on, I got this. Never let the opportunity of a good crisis go to waste. There you go. I told you I'd get it. All right. Steps to pique an investor's interest. So to the anecdote that I referred to earlier. So we had a client came to our door with a term sheet. Great, excited. This was for a seed investment, first investment through the door, and they were really happy that they had done all the hard work. They had worked hard on their pitch decks. They had made the right connections. They had followed up with the right relationships to be able to say, hey, they've received a term sheet. However, the term sheet only had an expiry of 2 days. Now, this is customary with term sheets because a lot of times investors don't want you to shop around their term sheet, right? So they give you a very short window to actually be able to sign the term sheet. Then once the term sheet's signed, we're going to have to open up and show a data room. And the data room is where you have all the agreements and everything that you need to see for folks, which are the investors, to be able to analyze, has your company been set up correctly? Was the mores of the company correct? Did you incorporate correctly, right? Did you sign the right employment agreements? Did you sign the right IP agreements? Do you have the right supply agreements, NDAs, consulting agreements in place? Do you have all the necessary shareholders agreements, share option pools, and a variety of other stuff in place before we invest in you? Because like I said, contracts create value, encapsulate value. They're not going to invest in something that they cannot hold value in, because then their investment is at risk, and no one throws $1 million around or more without making this type of investment. Well, at least due diligence, sorry. So back to the story, we go and we look at this client's kind of situation. We're like, wow, this is, it is really all over the place, and not much is done. And it makes sense. I've started companies before where legal is really an afterthought until it happens, and then it is a really front thought. But it puts an immense amount of pressure and intensity for you to get yourself completely compliant, up to speed. And sometimes it might be really hard to do so, because you would need to file certain things with the government. So sometimes it's really hard to do it right away in those couple of days to get your data room ready and get all your documentation ready to show to investors. Imagine if you were selling your house and someone came up to you and said, well, we're ready to invest in your house. We're ready to buy your house right now, but you hadn't staged it. You hadn't taken any photo shoots. You hadn't cleaned it up. And they were saying, we're coming right now. We're going to check it out. And if it's good, we're going to buy it, right? And you had done none of the prepping of the house that's necessary to actually, put your best step forward. It's going to be a pretty stressful time. So what are those types of things that I refer to that needs to be considered? Like I said, it's a lot of times the agreements that that I discussed about previously. And one thing that we could do as a law firm is that we can kind of go in there and see what you got and what you don't got, right? We can come in and we can say, okay, how have they set themselves out? How are they setting themselves out? What's missing? What's not missing? At least there you can understand where you stand with respect to your legal and corporate agreements. Just a continued slide here about some other stuff that you need to get ready for. A lot of other things that you might see happening is getting your data privacy management, especially if you're a data company. It's extremely important to have data considerations put in place. Your data is your property and it's your value, right? And now with the ever increasing changes with in Canada with the Privacy Charter, in California with their Privacy Acts, in Europe with GDPR, you're going to see an increasing trend where data is going to be at the forefront of legislation, and it's going to be extremely necessary to put the proper agreements in place to ensure that that data is yours, that it's yours in a compliant fashion, that you're transferring, compiling, caching the data in a way that is legally compliant. Because if you've ever seen kind of the hefty fines being thrown out by the European Union towards Google, they are fairly hefty. So that's another part of the thing that we can get you ready for. And again, investment ready prep, making sure you got a term sheet, you got a solid offering, you got a cap table set up to make sure that the investor sees clearly what exactly your capitalization is going to look like, etc. All right, so why now? I kind of alluded to it a little bit before about why we should get going now, but I think that there's a couple of general things that I would probably comment on this with respect to why now. And that is essentially, I think one of the most interesting parts of COVID is that the trends that have kind of developed from COVID were trends that already existed pre-COVID, but there has only been an acceleration because of COVID. I think those trends are very clear to many people, and you don't have to really be a really smart market kind of analyst to get where things are going. This allows you to then kind of make some really strong decisions based on certain assumptions, right? You can make decisions about the ever digitalization of our workforce and the economy. Well, how does that play out with your business? And with those assumptions, you can kind of move forward in a much more convicted manner than maybe previously, where things weren't as set in stone as they may be or may feel like they may be. Another thing is that I think what we've been discussing with investors and our clients is that in a post-COVID environment, speed is going to be the key. Now, if you ever have started a company before, you should always assume that speed is the key. In one of Steve Jobs' most favorite books called Inside the Tornado, he essentially says that you have to make the assumption when you're starting your business that there was someone starting the exact same business with the exact same idea somewhere in the world right now. You have to try to base your assumptions on your business development on that, because if not, you actually might miss the boat, so to speak. What's scary is that book was written in the 90s, and that was true then. Now we find that speed is even more impressive. And why is it more impressive is because a lot of the bigger companies are also moving in that direction. And some of the advantages of you guys as smaller companies is that you guys have the speed and nimbleness to make quick decisions and to move quickly in that direction, pivot as well if need may be, whereas a larger company might not. And the larger company now, seeing that they also might be moving in that direction, have the resources to really accelerate it in that way. I know, for instance, with our business, we've been a totally virtual and digital law firm since our inception. But we have certain law firms in the United States, in a matter of a week, being able to catch up to where we were as well, just on the kind of digitalization of their workforce. because they have the financial resources to do so. Um, and lastly, time. I think that a lot of us, I find, in this kind of quarantine environment are kind of divided between the folks that are discovering TikTok and the folks that are really busy on their businesses. And I think that if you wish to be, if your business is running a TikTok account, mad respect, we can help you with that. But if your business is to much more in a traditional startup sense, then we could definitely see you guys really putting a lot of hours during this time where there's not much else to do. So with that in mind, I think you should capitalize in this time, make the investment necessary there to kind of make sure that your startup is on the right foot when things start to return back to normal. So yeah, a little bit about us. I guess we already talked about it. We are entrepreneurs as well, specializing. We only do startup law, emerging tech law. We don't do anything else. We're completely tech enabled, where we haven't printed a paper since 2018, and we use a lot of other legal tech tools at our disposal to be able to kind of help you guys better. One of the things that's really interesting that we got is the entire venture capital financing. We use actually a tool to help us automate up to 60% of it, allowing us to give you a fixed price on that. So we're almost essentially done with the billable hour, so to speak. So with that in mind, I think if you guys are more accustomed to using flat rate, transparent, and subscription-based pricing, you'll find us a little bit more interesting. So yeah, this is kind of our special offer package for the team here. And this is really to make sure that you guys are completely ready with respect to investment. What this essentially means is that we'll go in, you'll create a data room for us. We'll go in, we'll look at all the agreements, we'll review them, and then we'll give you a checklist of what's missing, what needs improvement, what needs to be done. At least there you'll have a roadmap, clearly step by step, of what needs to happen before you go seek investments, right? Again, you want to put your best foot forward towards the investors, and you don't want to have any flags come up in due diligence where they come and they say, well, they're missing this, they're missing that. It doesn't look good for you. It could make or break a deal. And you want to make sure that these easy stuff is taken care of. To be honest, a lot of this stuff is, it's the equivalent to a layup in basketball. Like, you got to be able to make them in, and if you don't, it's gonna look poor on you vis-a-vis the due diligence of the investor. So yeah, essentially we see all your documents, we review what you need, we review what you got, and we give you a legal memo kind of highlighting what you need to get done, and then hopefully down the line we'll be able to help you out with that as well and get you nice and cleaned up and ready to receive investment. Cool. So there you have it. We'll get into, I guess, a little bit of our question section. And we got a couple of setup questions here for Devor and I. And we can kind of get our discussion going. Hey, welcome back. So we can kind of get our discussion. We can kind of get our discussion going with you guys at the moment. So, okay. So our first question is, how does startup investing differ during an economic downturn? This is, I kind of already alluded to this earlier, but I'll just bring it up again, is that I think you guys really need to find what your niche is and what is your value prop in vis-a-vis kind of the market at large. Sorry, I just got a question here from someone, so I'll take that right now. Yeah, his question is, are these services from Renno Co for US or any other nation? We have lawyers in the US and Canada, so we can do work in the US and Canada. Whatever you need on that side, we can help out as well. We also have a extensive network of lawyers, uh, especially in Europe, where if we have any type of European work that needs to be done, we can also assist with that. So I'll let you guys at this time. We'll keep talking, but I'll let you guys kind of ask questions as you may go along. Like I said, thanks again for your question there. Um, so yeah, how does it differ during economic downturn? I would really say, find your niche, find what you're going to do that is different than the market currently, and how the current market situation uh, benefits your business and how your business can be attractive to them. Uh, most VCs that I talk about um, are had kind of completed all the term sheets that are out, finished the transactions they had finished, and then they wanted to have a kind of wait and see to ensure that their companies were well capitalized in their current portfolio. This stage is going to take maybe a couple of months to ensure to see how these companies have been well capitalized. You'll see a lot of startups kind of really reducing their kind of their employee levels. Don't fret about that. That's just the investors saying you need to ensure your burn rate is reduced and your runway is extended for as long as possible, just as a preliminary safeguard measure. That does not mean that they're not investing. And again, I was having some virtual whiskeys with a VC friend of mine, and he was like, look, we are really, really aggressive on these new kind of companies that are coming out from a post-COVID environment. For instance, he was talking about this company that I don't know what its name is, but essentially you get to it's makeup tutorials, influencers trying things out, trying clothes out, trying makeup out, but you can also shop while they are trying out products. Something super big in Asia at the moment, not so big in North America, but again, this virtual kind of shopping experience is something that we're going to see potentially take off in that correct direction. So VCs are looking for that type of market opportunity to invest in and capitalize in. Make sure that your company is that market opportunity for them.
Another point I'd
So
like to, oh, sorry, Tufik, just leap in here for a second, because I saw some
yeah,
of the
yeah,
questions,
please.
saw
Yeah,
some of the
yeah.
questions coming in. So one other way that it differs is, on the one hand, there is still a lot of VC money out there. I've also been speaking with VCs. They have money that they need to invest. They accepted money from their LPs. These are the folks who give them money to invest on behalf of others. Angel networks also have the same issue. So they have money and they need to find a good return. Now, the stock markets right now are not giving a good return. If you notice, the price of oil actually went negative, which was truly astonishing. So they're looking for places that will give a good return and that also, as Tufik, as you pointed out earlier, are counter-cyclical. So in order for you to attract one of these investors, you do need to have, for example, the paperwork ready. You need to have the prep work done. I saw a question, someone is asking, do I need to do all this? Well, yes, because on the one hand, the investors are looking for places to invest. They do need to do something with their money, but they're also being cautious and they want to be absolutely certain that you're ready. Have you done your prep work? File for your patent, know your market niche, also have your paperwork done. If, for example, you have employees and no paperwork, your company may not actually own your own ideas. And an investor, they're going to run away from risk like that, especially right now. So on the one hand, as Tufik said, there are a lot of opportunities out there and a lot of investors looking for those. But on the other hand, they're going to cross those T's and dot those I's even more aggressively than normally under these conditions.
Mm-hmm, mm-hmm, for sure. Thanks, Deborah, for that. So we just got a couple of questions here that I'm going to take at the moment. So first question is, can we still go ahead and get clients and partners without having all this prep work completed? Again, I think that you really put yourself in a dangerous position by having kind of agreements with people that are not signed. There, especially if you have some proprietary IP, you're going to have that kind of exposed to somebody who's not under any type of protection. That really puts your IP at risk. Again, working with um, partners with no shareholders agreements. I've been in situations with clients where, they run their business. I'll give you an example. I had a client, it was 50% one guy, 50% another guy, and no shareholders agreement, both directors. And, for lack of a better term, one of the shareholders just fucked off to Europe and never to return again. But it really put a lot of blocks and problems and obstacles for the current founder that was still around, because you could see that you needed the two directors to sign off on things. So he couldn't sign off on things. He couldn't get loans. He couldn't do business with the bank. And the other founder was in Europe, unresponsive. And when he was responsive, was completely, uncooperative. A shareholders agreement can deal exactly with that situation. So you don't want to spend, X amount of $1,000 in legal fees fighting a nasty battle to remove the shareholder in the courts. Just get a shareholders agreement signed. And Devoro, jump in here if you have any other points. I'm just going to take these questions right off the hop, seeing that we're almost at the top of the hour.
Yeah. Tufik, do you want to quickly go down to the offer to remind everyone, in case, go down to that slide real quick. There was one question I would grab. Yep. Are you ready to start? Right. Just as a quick reminder, you will see the two links in there. So for us, patent side, it's kisspatent.com/services/DIY-search. The link is there. And for you, Renno Co, kisspatent.com/services/investor-readiness. You can obviously speak to both of us. There is some concern. I know I did see some concern, like what happens if we talk to you, Tufik, or to me about someone's idea? We keep everything secret. We believe very strongly in secrecy. It is a requirement that we have to keep everything confidential, but we also want you to feel comfortable. Both Tufik and I uphold this standard because we really want you to know that your ideas are safe with us, and also your legal questions, right, Tufik?
For sure, yeah. Like Devor mentioned, when you talk to an attorney, it's under attorney-client privilege, and that's one of the highest levels of legal secrecy that are allowed by law. It's a constitutional right, and it's something that we take extremely seriously. We have clients in blockchain, and they really hammer us on this. So we actually have a lot of secrecy, and we use we use Signal and many other kind of tech-focused platforms to allow for your kind of secrecy to maintained. But yeah, you can check us out on the websites below there, kisspatent.com/services/DIY search or kisspatent.com/services/investor-ready. Or you can also hit us up by email, info@rennoco.com or contact@kisspatent.com. We'll be happy to just chat with you. Again, chatting with us, it doesn't come at a cost. If you want to just come and we can bounce off ideas, that's totally fine. Don't worry that we're going to send you a bill or all that jazz. That's
that's not us.
Yeah, that's not us for sure. Couple of other questions here. Maybe I can get to quite quickly. Does it put me at risk to present my idea and prototype to ask help for patenting? From us, no, because we have the kind of attorney-client privilege. For others, you should always make sure that any interaction with your IP is protected, right? That there's some sort of written agreement between the interaction with the IP and the external person. That also includes your employees and yourself, right? And you might say, well, that makes no sense. You have to protect your IP for yourself because you want your IP to belong to the company and not you, and you don't want a kind of division of title or a situation where there is a non-perfect title. So you have to make sure that you have correct IP assignment agreements in place, and with non-employees or non-consultants, you need to make sure they have proper IP-specific NDAs in place, because your NDA off the off Google ain't gonna cut the mustard, as they say.
Hey, here's one quick one I want to take to Fik before we go. Having an academic institution part of your patent or IP, does it strongly affect your chances of attracting VCs? Here, I would say, first of all, which IP do you own and which is university's own, and what does your agreement show, right, Tufik?
Hmm. Hmm. For sure, for sure. And again, universities are a bit of a tricky business. Sometimes, on a marketing perspective, it can be very powerful. A lot of times, universities, when you sign agreements with them, especially if you're doing your PhD with them, they actually have very robust IP protections for themselves.
Yeah.
Yeah, in a general rule, everything you do in the university belongs to the university, and they actually have a commercialization department that takes your ideas and tries to make money off of it. But we'll have to kind of analyze. It's a case by case basis. We'll kind of have to analyze your relationship with the university and the academic institution, um, in order to make sure that the relationship is structured correctly. And if it is structured correctly, then definitely it can be a value added to your business.
And one other
Um,
quick note on that, if you do have ideas that clearly belong to you as the company, your agreement should clearly allow you to file, but you should also file for those ideas before you end up with maybe an entanglement. Maybe you talk with the professor and then the professor starts to think it's his or her idea. A lot of times these are about human relationships. We can put all the agreements we want down on paper, but if you file for your patent before you talk to the professor or before you talk to a VC, before you talk to an external supplier, you have the assurance of knowing that your idea has a date and you filed and you're protected. And that's one of the strongest kinds of protection you can get.
mhm, mhm, for sure. Yeah, the patents is la creme de la creme, the protection for sure. So just continuing on this list here, have you all taken equity positions in lieu of fees? Is that on the table as a possibility? Do you all assist with finding investors for your clients? So I'll add, that's a kind of a two-part question: the equity question and the investment question. So on the equity question, I will say this: it is rare that we take equity positions in clients. We have done so in the past, but it is rare. It has to be a very, very, very specific type of situation that really that we really feel works for that type of kind of arrangement. In principle, I would say no, but we could talk about your idea and see, but in principle, no. At least from our end. Um, on Do we assist clients in finding investors? Uh, abs- Absolutely. We like to, just have kind of the network that we have, the ability to use our network and allow you guys to kind of leverage that network to assist. Obviously, we kind of think of our relationship with you guys much more as a partnership of growth, where we're growing with you and you're growing with us, and we're kind of in this together rather than kind of a value extraction approach. I want to kind of create value for you guys. So if we can assist you guys, not only as legal people, but as business VC and strategic advisors, and put you guys in front of the right people, then we'll be more than happy to do so.
Now, definitely, that is actually something I would also agree with, that we also do seek to connect you to resources that you need. Could be VCs, but also if either of us, I'm sure, knows a developer or some other help we can get, we're always happy to connect you, especially these days we're all kind of locked up at home. Our networks, our communities are really what makes us strong, and now we need to access them virtually. So we are always happy to help our clients, and I agree with Tufik. It is a value assistance. It is a way to help you grow, and then of course we grow as well. One other question: do you assist with performing evaluations for the IP in the company? So the answer to that is yes, we do, and I believe Tufik, you do as well.
We assist with the negotiation of the valuation, and we help you set an initial price point for the valuation of the company on a negotiated basis to actually value the company in an accounting sense. That's something that you have to get a specialized accountant called the Chartered Business Valuator to do that. Not every accountant can do it, so don't go to your kind of your accountant, your corner accountant in the strip mall to do it, because it is a bit complicated, especially for early stage startups. But a lot of times, I know in the United States, you have to get, your 401A valuations and stuff
Mhm.
like that. Uh, but a lot of times, your valuation is a negotiated uh, number, right?
Mhm.
It is negotiated between you and the VCs, and it's a big negotiation point in the discussions with the VCs. So I would suggest, so in that sense, we do help, but again, your valuation at that stage will be set by the market.
So we actually, in terms of what we do for valuations for the idea for value, we are looking at what your patent would protect, what market niche you would have access to. And that's an important aspect of the valuation of your company. And then as Tufik says, we do also assist in other types of valuations. You do need to have a very specialized kind of valuation on top of the patent one, which is one for your company. But it is all negotiated. Folks may tell you, oh, this is the number and the number can't change. No, no, that's not the way it works. It's a negotiation.
Mhm. We have another question. I think, Devora, you could take this one. I found a patent that should not have been issued because it is really similar to an old idea. Can I protect myself against that?
So that's a tricky question that we do help answer. That requires what is known as a freedom to operate opinion. One of the defenses against patent infringement or trespassing on someone else's patent is that the idea is old. However, you have to be careful. The patent may discuss a lot of old ideas, but the claims, that's kind of the business end at the end of the patent that describes what legal rights they have, that may actually be valid. So it is a tricky process to look at. However, we do that kind of evaluation, we do that kind of analysis, and we also do that kind of opinion. Two ways out of it. One is to say, you know what, the patent may be real broad, but the claims are real narrow, in which case maybe you're okay. We can help write that. Or the other way around, as you point out, claims are invalid, patents not valid. I have some prior art, I have things that were published or known before. We can also evaluate that with you, and then we can write an opinion to show that the patent isn't valid if in fact it's enough to do that. So it is a very technical legal opinion, but it is an area that we specialize in.
Cool.
Now one last one about inventors, and then I think we'll let Tufik and I will wrap up here. So if the patent was filed and granted but doesn't list all the inventors, that is potentially the grounds for invalidation in the US. It is much less so in other countries. It'd be relatively difficult to make the case for that in other countries. Sometimes there are questions about ownership. That is where the agreements come in. So for example, if someone is an inventor and they weren't listed because maybe you were afraid because they left the company, that's not a good thing to do. You should always list the correct inventors on the patent because that can be a problem, especially in the US, but that's where having the agreements come in. As each employee and contractor comes in, they sign an agreement assigning all of their patent and other IP rights to the company, as Tufik will help you do, then you'll be in great shape. So you see the legal and the patent side, they come together. They have to interlock for you to be investor ready.
For sure, because you cannot patent an idea without the legal kind of documentation in place to get that idea ready to be patented. If you have um, if you have certain employees or relationships with people who have interacted with that patent, and you want to patent, that could be a possibility where your patent right is imperfected, and it could cause problems with the patentability or even the success of your patent or the defense of your patent down the line. So it is definitely hand in hand, and you got to kind of do both to ensure safekeeping of your ideas. So with that in mind, we'll bring it back to kind of our special offer for the webinar here, right? Essentially the micro patent course, free patent search, kind of get your idea off the ground, see what's out there, see how valuable it is, and kind of their investor readiness package. We'll dig in and do the due diligence that the investors will do on you right now, and make sure that we run a stress test of all your documents, your corporations, and what you got to ensure that when the time comes, you're clean and ready to showcase your baby.
Excellent. We will be sending out the recording in case you missed something. And of course, with that, we'll also be sending you the links. But please email us, talk to us. We want to hear from you.
Yes, for sure. All right, guys.
Thanks so
If that's
much.
all it, thank you.
Thank you. Thanks for attending. We really appreciate it. Bye. Thank you.
Bye.